tracking the jobs market. Why do we track the jobs market? Well, as I said off the top of the show, the Fed, the Bank of Canada, central banks, they're always looking at jobs data. And we have a chart here. I think the first one is the US jobs, most recent jobs report that we saw, 339,000 jobs created for the month of May, above what we thought, above expectations on that day, which was a few Fridays ago. I actually thought the market was going to sell off because good news is bad news, because maybe the Fed was going to raise interest rates based on that. Well, the market didn't think so. The market took it as good news, that if we still continue to grow jobs, or the US continues to grow jobs, and we continue to grow jobs in our country, that's a good thing. That means a recession is not in the cards. It's hard to have a recession if there is job growth. But we need to track jobs data because we know central banks are tracking it. And the better the jobs data is, perhaps the more of a chance that the central bank, Bank of Canada, Federal Reserve will, or the more of a chance they will have of raising interest rates. And here we have Canadian jobs information here. And you can see that little red mark on the far right-hand side of the illustration tells us that first time in a while that we actually had negative jobs growth. We lost over 17,000 jobs in Canada. So I think, to me, that caused many people to question why the Bank of Canada just raised interest rates. They're raising interest rates in the face of a slowing economy and job loss. That's not a good thing. And many people, a little concerned that if the Bank of Canada continues to do this and we continue to see job loss and a continual slowdown in the economy, does that mean we are going to go into a recession? And would it be the Bank of Canada that may put us in a recession of some sort, whether it's mild or not, because of this rising interest rate environment? So tracking the jobs data is extremely important and something that I think we need to do. I know we have, I think, one more illustration here of interest rates, Bank of Canada policy setting interest rates. We have that illustration, and you can see as job growth has been pretty good, you can see that interest rates have gone up with respect to, I think they've raised rates in Canada now, 10, 11 times. So there you have it. There's the interest rate policy setting. And you can see on the far right how much we've raised interest rates over the past roughly year. So again, we track jobs data. I think it's important for everyone to know the end of June, beginning of July, they're going to have the June jobs report. And that's going to be important for setting policy for the month of July.